Hello guys, I'm Paras, the options guy, and welcome to the No BS Trading Podcast. This is episode number 24, and today we are going to talk about some interesting things like how the US CPI can be a pain in the A for the Federal Reserve. And by A, I hope you guys understand what word I'm talking about because family friendly show cannot say that word on camera. But anyways, then we are also going to talk about how the Maharashtra elections can affect the markets and how the markets can move after the Maharashtra elections. And we are also going to talk about the NTPC Green IPO that is coming next week, which is catching a bit of hype. And I'm going to tell you if you should apply to the IPO from various different standpoints, and if it is a good IPO for you to apply to for you to invest your money in. But yes, without any further delay, let's just start with the episode. So first, let's talk about what happened in the previous week, starting off with the India CPI inflation numbers, and that came out on Tuesday, and the expectations were that it would come out at 5.8%, but it came out at 6.2%. And with that number, you can be rest assured that the RBI will not cut rates in its December meeting, and probably will need to wait for some more time before we get any sort of rate cuts, because Mr. Shaktikanta Das, the RBI governor, clearly said that until and unless we have proper confidence that inflation is coming down, we will not cut rates, right? And this just does not show any sort of confidence that inflation will come down. In fact, the CPI inflation has gone above the RBI's tolerance band of 6%, tolerance level of 6%. So I don't think they will cut rates at all in the December meeting, and we will probably need to wait for some more time before we see any sort of rate cuts coming from RBI. After that, on Wednesday, we had the US CPI numbers, and those numbers came out in line. But as I said, that now again, let's talk a bit more in depth with starting off with CPI on a year over year basis. CPI came out at 2.6%. Expectations were that it would come out at 2.6%, but this is actually an increment from the previous month, because previous month CPI came out at 2.4%. That means CPI is officially now on the rise. And then if we see core CPI, it came out at 3.3%. Expectations were that it would come out at 3.3%. Again, in line, but again, pretty much same as what happened in the previous month. Previous month also, core CPI was at 3.3%. Now, as I said, that CPI is rising over here, if you guys understand, right? Previous month CPI was at 2.4%. This time CPI is at 2.6%. Now what does this mean? This means that Fed is cutting interest rates at a time where CPI is increasing, where inflation is on the rise. So tell me, is it a good thing or a bad thing for the markets? Definitely a bad thing, right? Because if the Fed is cutting interest rates when the inflation is rising, that means inflation can very well get out of control over here, and we could see a very bad sentiment being created in the market because of that. Anyways, after that on Thursday we had the PPI numbers, producers price index, something like wholesale inflation, you can say, okay, and that came out at 2.4%, where expectations were that it would come out at 2.3%, and core PPI coming out at 3.3% with expectations of 3.0%. So PPI numbers also coming above average. That means another thing that is telling us that inflation might be on the rise, and at this point the Fed has already cut rates by 75 basis points in the last two Federal Reserve meetings, right? So this is really not a great sign. Inflation numbers are bad, and the markets have reacted badly, slightly have reacted badly on Thursday. But yes, on Friday, if you see, now I am recording this at 12:30 a.m. in the night on Friday, and as of now the US markets are still open. So again, let's see if they recover or not. But anyways, very bad inflation numbers, not very bad, but still bad inflation numbers from the US. And what was more funny than this is that on Thursday itself we had Jerome Powell's speech, which I actually forgot to mention in my last week's episode. I think I didn't see it or anything, but anyways, we had Jerome Powell's speech, and the one of the most important lines in the speech, or the just one important line in the speech, that was Jerome Powell said that Fed is not in a hurry to cut rates. They started off with a 50 basis point cut. They started off with such a big rate cut in September, and then they are saying that they are not in a hurry to cut rates. Uh, um, uh, it's really, I mean, confusing to talk, to, think about it, because like at one on one side you are saying that you're not really in a hurry to cut rates, but on the other you are just cutting rates like the economy is already in a recession. So what is going on over here? Does Jerome Powell know that there is something wrong with the economy, or is the economy going to go into a very big recession in the coming time, because of which Jerome Powell is already taking steps to try to avert the problems that are going to come in the economy in the coming few months? Let me know in the comments, what do you think? Like, because again, they are trying to be contradictory in their saying and in their actions over here. So this is very, I think what is happening over here is that Jerome Powell is not trying to alert the world that something wrong might happen with the economy soon, or something wrong is going to happen with the economy soon, because of which, we are cutting rates. But I want to assure you that we will not cut rates so fast, because things are great, right? So again, this was the most funniest thing that I read this week. This comment that Jerome Powell gave, because like you're straight up lying on camera. Like, how does that work? Really, I cannot understand. But yeah, that was it for the previous week. These were the things that happened in the previous week. Now let's look at the things that are going to happen in the next week, and the important events that you should definitely give attention to. Now, talking about what is going to happen in the next week, we have the Maharashtra elections that are going to happen on November 20th, which is Wednesday, and the markets will be closed because NSE and BSE are situated in Maharashtra, and that's why. And so, what Election Commission has said that all the offices in Maharashtra should be closed on November 20th, and because of that, NSE and BSE are also closed. Anyways, one more holiday in the year for you guys, if you're working or anything. But anyways, on Wednesday we have the elections, and then on Saturday itself we'll get the election results. Now, how will the election results affect the market? To be very honest, they will not really affect the market so much. Yes, Maharashtra is a very important state. It is a very big chunk of our GDP also, and the party who controls it will definitely also affect its policies a lot, and which means it will affect the GDP of India also a lot, which means it will affect the stock market also a lot. But still, in my opinion, until and unless there is a very big change in the political landscape of the state, I don't think there will be a lot of change. I don't think there will be a lot of movement that will be coming in the markets because of the elections, right? But anyways, we need to take our precaution. And how will you take that precaution? Just don't take any overnight positions on Friday. Okay, just don't take any sort of absurd risk on Friday. Come back on Monday and then start to gamble again. Okay. I'm sorry. And just then start to trade. Okay, just don't take any sort of overnight positions, right? And even if you're taking any sort of overnight positions, take some extra hedges with you. Okay, that's the best you can do if you want to safeguard yourself from this election, just in case something really bad happens, or really out of the something which is out of the blue happens. So you don't want to get caught off guard over there, right? So that is why you should stay extra careful as the election comes closer, as the results come closer, and as the week comes to an end. Okay, anyways, how will the election results affect? Again, same as what happened in the India's election, the whole country's election in June. If BJP comes in with a very good power, the BJP's coalition, okay, now BJP is in one coalition, and then we have Congress and other parties, Congress, Shiv Sena, and other parties in one coalition, right? But one thing is that there is Shiv Sena in both of the coalitions, because again, there are two different leaders of Shiv Sena and all that stuff. I really don't know that a lot about politics and all that stuff. But yes, what you need to understand simply is that if BJP's coalition, the coalition in which BJP is, comes into power, it will be good for the markets, and if Congress comes into power, it will be bad for the markets. But again, as I said, that there will only be an effect on the market if something really out of the blue happens, or if there is very major win or a major loss in either of the coalitions, only then will we see any sort of effect coming into the markets. If that does not happen, if the elections go as smoothly and there is nothing really, no sort of a big win for either of the parties, then you will not really see any of the movement coming in the markets because of the elections. So I hope you guys understand. But yeah, aside from these elections, there is nothing really important that is going to happen in either our markets or in the global markets for the next week. So let's move on to the IPO, the NTPC Green IPO that is coming in our markets next week, and I'll tell you if you should apply to the IPO or not. Now talking about the only IPO that is coming in our markets next week, the NTPC Green Energy IPO. Now NTPC Green Energy is a wholly owned subsidiary of NTPC Limited. Now you would have heard about the stock. It is a listed stock and a pretty big stock in our markets, right? So this company is a wholly owned subsidiary, and NTPC is raising money for the company. How much are they raising? 10,000 crores. And this is completely a fresh issue. That means NTPC Limited is not divesting their stake from the company. They are still going to hold all of their stake that they have in this company. They are raising fresh money from the market, and all of these 10,000 crores will go to the company. Anyways, should you apply to this? First of all, let's talk about when the IPO is going to open. The IPO is going to open on November 19th and it is going to close on November 22nd. It is going to be open for 4 days because on November 20th the markets are closed, and because of that the IPO is going to be open for 4 days. Anyways, let's talk about the IPO from the listing gains perspective. Should you apply to this IPO for listing gains only if you want listing gains? The answer is no, because the grey market premium of the IPO is going on right now at only 1.3%. But somehow magically by the end date of the IPO, that is 22nd November, if the grey market premium rises above 40%, you can then invest in this IPO for just listing gains. But until then, don't take the risk of investing in this IPO for listing gains, because you are most probably not going to get any. Anyways, now let's talk about the IPO from the investment perspective. Should you apply to the IPO to invest in NTPC Green Energy? And the answer to that is, let's talk about it. Okay, so if you see over here the financials, first of all we'll talk about the financials of the company. In FY23 revenues were only at 170 crores, but in FY24 revenues jumped to 2037 crores. This could very well be because the company got a lot of basically the company got a lot of you can say revenue transferred from NTPC Limited to NTPC Green Energy Limited. So a lot of projects might have gotten transferred from NTPC Limited to NTPC Green Energy Limited, because of which you see such fast rise in the revenue for such a big company, right? At the same time, if you see profit after tax in FY23 171 crores, and in FY24 344 crores. Now one thing you might have noticed over here is that revenues for FY23 were only 170 crores, but the profit after tax was 171 crores. How can the profit after tax be higher than the revenue of the company? And the simple answer is deferred tax credit. Now basically the company got a tax credit of 110 crores in FY23. Basically you can say a tax relief or a tax, basically the provisions that they had made for the tax, they didn't really had to pay that tax, so they got that relief, and that was amounting to 110 crores, right? And the company's basically in profit after tax, except for that tax credit, was 51 crores, because of which the total amount in profit after tax came out at 171 crores, and that is the reason why profit after tax was higher than the revenue in FY23. Anyway, something which you should know, because sometimes you will get confused because of these numbers. You'll be like, how is the profit after tax higher than the revenue? Just go and look at the financial statements. You pretty much will understand how the numbers how they came up with these numbers, right? So anyways, growth is pretty good, but One thing which is really problematic for the company is the valuation of the IPO, because the post IPO valuation of the company will be 206 of the company in terms of PE will be at 260. So the PE ratio of the company will be at 260 post IPO, basically at 108 rupees. This is very expensive. Not very expensive, but pretty expensive, as you can say. It's not the most expensive thing, but it is pretty expensive. But so, is it really worth it to apply in this company? The answer is yes, but with some caveats. Now, I'm going to talk about those caveats. First of all, the company is very much dependent on government contracts and government support for the renewable energy sector. Okay, keep this in mind. The second government starts to go away from the renewable energy sector or is not very interested, this company will suffer a lot. But at least for the next 5 to 7 years, I don't see government really, batting an I don't see government really shying away from investing in the renewable sector. So that is not really going to be a problem for at least the next, you can say, 3 to 4 years. At least for the next 3 to 4 years, this is not going to be a problem. Okay, that is one thing out of the park. Okay, now as I said, that the company is really expensive, right? At 108 rupees, which is the IPO price. Okay, the price band is 102 to 108. You will apply at the cutoff price, which is 108 rupees. So at that point, right now, the company is very expensive. But what you need to understand is that the out of the company's portfolio of 14,696 megawatts, more than you can say approximately, you can say more than 80% is in future projects which have been awarded to the company, or in which the or which have been contracted with the company. So that means a lot of cash flow will come in the future. Okay, a lot of cash flow will come in the future, because of which, if you can hold the company for the long term, and by long term I mean at least 3 to 4 years, only then apply. Okay, if you want to exit maybe in the next 1 to 2 years, you might not get such good results, because the company might not give you very good revenues by then. So the share price might not appreciate by then. So because of that, if you want to invest in the company, invest for the long term, and by long term I mean at least 3 to 4 years. Okay, maybe more than that if you want to, but at least 3 to 4 years, right? If you cannot hold it for that long, please do not invest in this company. Rather wait for the markets to correct, or wait for the company to correct, right? If it comes near, you can say, even like 75 rupees or 80 rupees, then also it is a much better buy, right? So as I said, that only if you want to invest for the long term, you can think about investing in this company for the long term, because again, the company is very strong, right? If you see, it is the biggest you can say renewable energy company in the market, in the whole industry, right? So that is one of the biggest things for the company, is that it is going to be stable. It is not going to be a company which is going to face a lot of hiccups, right? Hiccups with, let's say financing, or hiccups with any sort of other problems like debt recovery, or not debt recovery, but debt servicing and all that stuff, right? So in that sense, it is a very stable company, but purely a long-term play. Please do not invest if you don't have a lot of time to invest. If you don't have a lot of time, if you, let's say, want returns in 1.5 years, you might be disappointed. Okay, you might or might not be disappointed, but as I said, that invest only for the long term. If you can't do that, stay away from this company. Maybe if it comes maybe if it corrects from here, then you can start to invest again. Then you can start to invest in this company. But yeah, that was it for the IPOs that are coming in the market for the next week. Now talking about the market analysis for the next week, if you see over here, Nifty down 2.5%, Bank Nifty down 2.6%, almost 2.7% in this week. And as I said that we will definitely see a momentum in the first 1 or 2 days itself. We will know where is the market trying to go. And yes, if you see over here in the daily charts, on Monday, markets were pretty sideways. If you see, Bank Nifty was up a little bit. But then if you see from Tuesday itself, sell-off continued and the markets continued to move down, right? On Monday, if you see, markets were up, markets were pretty flat, Nifty was flat, and then from Tuesday onwards, market tried to move down. And as I said that in the first 1 or 2 days of the week itself, we will get to know where the market is trying to move. Now, the way the markets have closed over here, Nifty over here, if you see, closing down 2.5%, Bank Nifty closing down 2.6%, it is not really looking very good. And the sell-off might continue, but there are some crucial levels that you should know that will tell you if the sell-off is going to continue from here, or are we going to see a little bit of a pullback over here, right? So those levels, first of all, in Nifty are 23,350 to 400. Now, our target of this head and shoulder is achieved at 23,600, as I said, but that target technically comes down till 23,000, near 23,100. But I took it a little bit before that, just for safety purposes. But yes, anyways, now the level that you need to look out for is 23,350 to 400. Okay, this level will be very important, and if the market does not break this level very fast, chances are we will see a little bit of pullback in the market back up till 24,000 to 24,000 200 on the upside. Okay, so again, one more thing is that Nifty is at its 200 EMA right now. Okay, 200-day exponential moving average. So that is another thing because of which Nifty can get a bit of support, because if you see previously over here also, Nifty taking support, Nifty taking support from 200 EMA many times, right? So Nifty can again take support from this, maybe might go down a little bit over here and then again come back above the 200 EMA. So as I said that if Nifty does not break 23,350 to 400 very fast over here, then chances are you will see a little bit of pullback in the market up till 24,000 to 24,200. As of now, I would say don't even think about going, don't even think that the market will again go at an all-time high as of now. Okay, chances are that market might go for a prolonged correction over here without hitting the all-time high. And by a prolonged correction, I mean this type of correction that happened in the market from, you can say, uh, October 2021 all the way up till, you can say, November 2022. So for a year, markets were just consolidating, right? So that might again happen over here, because now the all-time high is pretty far away, and the US markets are also not looking good over here, right? US markets also looking like they might come down, but again, let's see. This is the first time markets are coming down after this up move over here. So US markets also in a bit of a crucial zone right now. But anyways, um, I don't see markets going to an all-time high. Maybe Bank Nifty might touch an all-time high, but Nifty definitely not looking like it can touch an all-time high over here. But Bank Nifty also, if you see over here, is near its 200-day moving average. So again, at a very good support of many things, right? So 200-day moving average over here, exponential moving average, 50,000 a round number, which is going to act as a support. So the only level that you need to look out for over here is 49,500 to 600. If market is not able to break 49,500 to 600 on the downside, then you might also see another pullback in Bank Nifty all the way up till 52,000. Okay, chances are that it might go up till 52,000. It might also take a little bit of resistance in between and come back down again. But that is something that we will need to look at when the markets do give a pullback. Okay, but yes, the crucial level for Bank Nifty is 49,500 to 600. If markets do not break that level, chances are you will see a bit of a pullback on the upside. But for Bank Nifty, that level can also be extended a bit at lower levels near 49,000 to 49,200 also. That is also good support. So there are two levels in Bank Nifty, but I think if Nifty breaks its crucial levels, then Bank Nifty will soon also follow. And so if you look at Nifty, I think that will give you a better indication of how the markets can move in the coming week, right? So now, most probably on Monday, we will open with a good gap down in our markets. So if you open with a gap down, what you need to do is not take a short position in the market. Why am I saying don't take a short position? Is that already everybody has taken a short position at higher levels over here, right? I'll close this 200 EMA. Already everybody has taken a short position in this fall over here. In Nifty also, if you see, already everybody has taken a short position in this fall. So if you open with a gap down, people will start to book their profits because they will see a very good profit on Monday at the opening, right? So they will book their profits, which means that markets might give you a pullback from here or a bounce from here after opening with a gap down. So what we need to do is we do not need to take a short position, and most probably market will open near the crucial levels that I said, right, which are 23,350 to 400, and in bank nifty near 49,600 to 500, right? These are the crucial levels where now bank nifty might be opening a little bit above that level, but nifty definitely will open near its crucial level most probably. So what we need to see is how are the markets reacting over there. So for that, it is better to not take a trade on Monday, rather wait for one day, see where the market is going. If the market continues its sell off, then we will take a bearish stance on the market. But if we see any sort of a pullback and the market closes higher for the day on Monday, if the market opens with a gap down, recovers and continues to move up throughout the day, if we see short covering throughout the day, then we will go bullish for a few days, just a few days, because we know that a pullback is going to happen in our markets. So I hope you guys understand what you have to do for the next week. Again, remember that we also have the Maharashtra election results coming out on Saturday. So don't take any sort of positions on Friday, overnight positions on Friday. And yes, on Friday, we might see a little bit of volatility coming in our markets. That can surely happen. So yes, that was it for the market analysis for the next week. So yeah guys, that was it for this week, and thank you very much for watching till the end. I hope you guys enjoyed this episode, and I hope you guys learned something new from this episode. Anyways, do let me know in the comments how much did you like this episode, and if there are any suggestions or any feedback for the podcast, because if you want something changed, or if you have any suggestion, I will definitely make sure to implement it if it is the right one. But anyways, that was it for this week, and I will see you guys in another episode in another week. Bye bye.